Good morning, traders. I'm Dennis Dick.
And I'm Joel Icahn. Welcome to Thursday's edition of Premarket Info.
S&P futures very quiet again here, Joel. We're losing volatility. Points. We're down just under a point. High of the day 1683.25 if we're quoting the December contract, 1678.75 the low of the day. So if you are, we are rolling here. So we're looking at December contract now.
Right, 84 even yesterday's high, 83 and a quarter, the overnight high. For the 400th time in the last 2 years, I will say potential double top in the market here, but that's a number that we're looking at on the upside, 83 and a quarter, 84. Coming back on the downside here, I really don't have any good support points. 78, 75 intraday are the pre-market lows. That's what we'll be keeping an eye on.
We'll get to Lululemon's earnings. We'll get to Netflix. We'll get to a bunch of our other stocks here this morning. But first, we're going to introduce Rob Friesen from Bright Trading here. Rob was on a couple weeks ago. We've brought him back by popular demand here. And he's going to talk to us a bit today about sector rotation, how money's moving in and out of obviously different sectors. We've been talking about the rotation on the show. Rob, how are you doing this morning?
Great. Appreciate having me back on the show. Thanks, Dennis and Joel.
Thanks for coming in here, Rob. We've been talking about rotation on the show, how money doesn't seem to flow out of stocks and into other as much as it used to. It seems to just flow from sector to sector. And are you seeing the same thing with your traders over there at Bright Trading?
Oh, absolutely. We definitely pay clear attention to things such as the Treasury yield and its impact on bond-related components such as your utility stocks and your REITs. So there's a definite clear leadership in the market at any given time, and that's a focus right now. If you want to bring up a chart of XLU, for example, it's definitely under pressure for a while here and has not participated with this rally.
And that's again due as treasury yields move obviously higher here. Stuff like that becomes a little bit more out of favor because a lot of these companies, your investors are coming in buying these for the dividend plays. And if yields are going up, those dividends are less attractive, obviously, as a group. So we've seen the same thing in the preferred stocks too. Joel, PFF, obviously, we've talked about that on the show too, where these stocks really haven't been rallying with the overall market, and it probably is interest rates. I think I agree with you, Rob. It is interest rates that are holding these things down. Do you see that trend changing anytime soon, or what do you think? Or is this just going to be a continued pattern here?
Before we move on, a couple interesting technical formations here. Multiple tops in that PFF at the 37.75, 37.80 level there. So you break above there. This is just technically speaking. And then also in the XLU, I did notice a double top in that issue, a potential double top here at 37.40.
Rob, what's your take here overall on where? Obviously, seen money come out of that. Where has money really been going?
Well, first of all, we have to look at the market factors in everything that it knows or can anticipate. So if we're anticipating a climate of tapering, into 2014 and so on, I mean, that's the current take. It's going to affect the present in a more accentuated manner. And so people have to think about, where do people think interest rates are going?
Right.
What's the consensus? Whether it happens or not. But that means that things are immediately under pressure based on that anticipation, or they're in demand. So you might see the early breakouts of another short-term bull market. What participants are being affected. So we're looking for that money rotation. And I'll give you an example of SMH.
Semiconductors.
Just want to caution people on where you're looking for performance. SMH is the semiconductor holder. In July, you had a lot of inflows into the market. And do watch those volumes. Do watch those inflows into the ETFs. There's reports on that. And then in August, we had an outflow. So basically 27% increase in inflows in July, and then August, 16% decrease. So it did pull back on lower volume. But we're right back up to that same inflection point. So SMH has been performing well for the 1 week and the 1 month. But look where you're at.
And that's exactly
Is this the time to chase that performance right now, or is it time to get picky and selective or find something else?
If it doesn't get above 39.72 here, you're right back up at that old top here. I'd be concerned if you just don't get a breakout above that 39.72 and keep on going.
And I mean, it's all about, we always look at path of release resistance. We look at different levels to see where a stock has the potential to go to. I mean, this stock, obviously this entire sector has been on a run here, basically a 7-day run, and it has come up to that key resistance point. So Rob, I think what you're trying to tell us is obviously, it's good to look, at setups and different things maybe, and put that in as when you're looking at the whole rotation issue. Obviously, money has rotated here and it has performed well, but obviously it just when certain stocks or sectors run into certain resistance points, you got to consider those as well.
Yeah, contrast that with XHB. I know we're focused a little bit on ETFs here today, but they're widely traded and they're a good proxy to use for people thinking about what's driving things. So, we obviously came from a great consolidation, great support all along that 28 area, 2850. And, we sort of broke out on a 1-day and a 5-day and even a 10-day now on that. That's a whole different animal to sort of, be involved in those earlier breakouts from a discount consolidation area and look for that money flow rather than be late in the cycle such as SMH and get yourself caught. And because of these outflows in these ETFs, we clearly see that much of the retail is getting whipsawed by being late in the chasing of performance rather than early. So the context, where you start, the backdrop is really important.
Another nice technical formation in NX in the home builders too. Another double top here, 30.37, 30.38. So that will be a key level in today's trading.
What I used to always say too, Rob, just to expand on your point there, I used to always, when I was trading, and I used to say this to traders that were just starting with their firm, I'd say stuff like, once if you're looking at comparing stock movement to like a train or something, it's always better to jump on the train before it starts moving. When you start trying to jump on a moving train, you sometimes get run over. And obviously, when you have a consolidation period like that XHB had for so long, the train's basically stopped at that point. It's giving you a chance to make a call. Maybe it's moving higher, maybe it's moving lower. But then obviously when you had that first breakout day up over 29, that might have been your insight there to say, hey, maybe this train's going to start moving higher. And then obviously we've had the last 2 days where it has indeed moved higher. So do you agree with that there, Rob?
Absolutely. You might want to contrast that with FCX because, for example, we suddenly had a shot over the bow on copper yesterday, and look at the reaction on FCX. Now there are some numbers that we're close to, but we definitely have a 5-day, 10-day, 20-day, and even a 2-month breakout on FCX right out of the blue. So what's going on in copper?
And we also saw it in U.S. steel there yesterday too. X we had talked about on the show a couple days ago. If it could get over that 20, that would start to be on a breakout, and actually did touch over there 2 days ago. And then the breakout continued again here. So just looking at the chart of U.S. steel, it closed obviously fairly strong. It's pulling back a little bit this morning, but again. You get these breakouts here, and sometimes they can continue to follow through. But that one's another one that's been on just a tear.
Right.
So, Rob, just to close up here, we've got to obviously get to the other movers here too. But what other sectors here do you think where money has been flowing out of interest rate sensitive stuff? It started flowing into the home builders yesterday, which is interesting because you'd almost think those are interest rate sensitive, and the financials have been moving up here too. So. just looking at the financials, what do you think of going forward there?
Yeah, the financials, there's a seasonality to things as well, and when people come back from
XLF, by the way, just for the
come back from the summer, they're always listening to, hey, what's on the move, and this time of year too, be aware that analyst recommendations are often adhered to a lot more than say get into some doldrum months. So September and January are particularly notable for listening to what analysts say and actually responding to it, acting on it. So watch for upgrades in the financials if you start to see that, or last week especially we had a few upgrades, and it was amazing to see the commitment of capital based on analysts banter. So watch for that, but definitely financials are strong in the 1 month, and not so they've come from a bit more of a consolidation point than some of the other things, but technology's good. You get in the fall, generally retailers often pick up in the fall here, so watch for that, and it's easier for people to focus on kind of the sectors first and then drill down into the industry groups from that point,
right,
rather than trying to sort through all the industries to see where some opportunity is. Make sure you're looking at it from the sector point of view first.
Okay, well, thanks,
Yeah.
Rob. That really helps, obviously. We're coming on to an 8:30 number. We're going to get Brent here on with that number in just a second. Rob, I just want to thank you for being on. Rob is actually going to stick around for a Q&A here, so we'll go through the stocks. We'll get the 8:30 number here. And then, Rob, if you can stick around, that would be great. And we'll see if we can get you some questions here in about 10 or 12 minutes.
Yeah, real quick before we get to that number here, just a couple of the issues that Rob mentioned. This FCX bumping up against this $33 level. Revisited that in early in the year, back in February and March. So, pulling back today as copper is getting whooped on a little bit. But that's an interesting level. And then one financial I want our traders to pay attention to: Bank America. Just bumping its head up against this 1470 level. It's done that on multiple occasions. So if you're looking for something against resistance, that's Bank America 1470 has huge resistance.
Brent, are you around
All
there
right,
with that?
fellas.
There he is.
Yeah, initial jobless claims for the week starting September 7th. 292,000. Economists were looking for 330,000, so a lot lower than expected there. Continuing claims came in at 2.871 million. Economists were looking for 2.96 million. Also had import price index for the month of August just out. That was unchanged. Economists were looking for a gain of 0.5%, and that index year over year was down 0.4%. Economists were looking for a rise of 0.4%.
Well, surprise, surprise, Joel. It's kind of a muted response here. Again, it seems like the only numbers that matter is the jobs numbers now. But we did sell off a buck right when that number got reported. We bounced back the dollar, so we're kind of in the same spot where we started trading right at 1681 on the December contract. Joel, maybe we should just bounce in quickly here. We're going to be short for time. So let's talk about Apple off the bat, because, wow, what a day for Apple. I guess if you were a bear, because down $30 on the day at one point. It is bouncing here today. A couple comments. First of all, Icahn was on CNBC, and he was pumping Apple, basically saying he's bought more down here. He sees, he was saying it's extremely cheap. So Icahn, you're getting a little bit of a bounce, I think, an Icahn bounce here. It's up $3.79 today. But are sellers just going to come in here and basically look at this as an opportunity to lighten the load, or is this continuing?
I was looking at a couple different levels in Apple, and not sure if I'm going to be able to get the entry point that I wanted. But I've been looking at this whole move off the 388 level up to 513 and change. Your 50% retracement would put you right at this 450 level, just above it. I'm not sure if it's going to get there. I think it's a kind of a position where you got a huge gap down. I would not like to see it go right back up. I would like to see it stay in this range for 2 or 3 days. Maybe take out a few lows, suck people in, and then get back up. then get a little consolidation and may dip a toe in here. But Carl Icahn called it a no-brainer.
Yeah, no brainer. I did hear him say that too. Just with like what Rob was saying, obviously though, if you're coming in here and you're just trying to buy it today, it's difficult. There hasn't been any consolidation. Obviously, you're just coming in. It's almost like gambling here a little bit when you're just coming in after a stock just gapped down $30 and you think it's going to come back. I also obviously depends on your time horizon too. If you're a long-term investor, it's a different story. But if you're a trader, it's very difficult. I mean, you can use yesterday's low as one point at 464.81, but that's all you got really. It's just that yesterday's low because it's obviously from a trading perspective, I do like to see that consolidation a little bit better, a little bit more, so you have a little bit more of a relevance on some of these levels. But you do have one point, and that's yesterday's low.
Right below that, I don't see any. I don't see anything until your August 12th low of 456.63. But Dennis, it doesn't look, and I hope it's not one of these V bottoms, where it hits and it goes right back up. I think there's some people caught here, and so I think there could be a little bit pressure on it. But if it did get down to 450, 455. Over the next couple of days, I think I'd be licking my chops.
Let's move on to the Lululemon numbers. Lulu reported here this morning, LU, 39 cents versus 35 cents, 344.5 million versus 343.1 million. So beat on the top, beat on the bottom, all looking good until they lowered Q3 guidance, 39 to 41 versus estimates of 44. Lowered the top line to 370 to 375 million versus estimates were up at 389 million, and they have taken the stock and they really beat it up when they got down all the way to 61.11. Incredible sell-off. It has actually bounced back nicely though. We're up actually $3 from those pre-market lows.
Yeah, see, only on pre-market info do you talk about a stock down $5 on a wicked rally here.
Yes, it is. It's on a wicked rally. $3 it's bounced here since those numbers. So the guy that sold at 61.11 is beating his head right now, saying, "Why did I do that?" The news algo.
Since that bounce, we got up to 64.82 here, so call that 65 level as minor resistance. Since we're already $3 off that low, I do not anticipate us getting back down to that level. I think anybody short that missed that little blip will be trying to put some bids out there. So looking at 65 as resistance, and then I'll just look at these support points, probably the half and whole numbers if you're looking to cover a large short position in Lululemon.
Here's another disaster stock for you. Reporting last night was Men's Warehouse, MW, and they just flat out missed on the top, flat out missed on the bottom, and cut the outlook for 2013. So they said and did everything wrong here. Bring up that pre-market chart. The stock closed at 38.77. Oh. It's now trading down at 33.44. So here's a nice 14 or 15% haircut on Men's Warehouse. It's just a little bit ugly for Men's Warehouse this morning.
Yeah, I guess Joe buying a suit there last week didn't make any difference in the stock price here. We kind of got a rounding bottom though here, Dennis. As again, stock down $5, and we can talk about support. You did get to 33 even, getting a little bounce
Big
off
number.
that. Yeah, getting some consolidations. Let's see if we can get any confirmation here on the daily. The dailies are going to do us anything on here?
You know what? Early May, you had three bottoms there. I'm looking at May 1st, May 2nd, and May 3rd. You had a low of 32.74 May 1st, 32.86 May 2nd, and 32.85 on May the 3rd, which is just under that 33 bottom there. So you did have some support back then too. So I think just the relevance is more just that 33 pre-market low. Obviously, it's bottomed pretty nicely in the pre-market here, so I think that's where the level you got to be looking at, that you need it to hold if you're trying to pick bottoms on this one.
Probably a better place to cover a short though, right, Dennis?
It's always hard to buy these stocks, especially when they've guided lower in that, but you do see them bounce back, like that OVAS one. Remember we were talking about that one yesterday. Holy mackerel. It is down this morning, but that thing was down at $8 when we were trading at pre-market. It closed at like 11. So OVAS. So sometimes you can pick bottoms and get lucky too.
Should have never got rid of George Zimmer.
Let's move on to Pandora here. AAP is trading up. New president and CEO. This was popping after hours. It's really popping here this morning. 402,000 shares have traded, and the stock is trading up at 22.89 after closing at 21.38. So Pandora, just like that, breaking out to new 52-week highs.
Right, bust out, breakout, see if it turns into a fake out. 23.13 pre-market high. That obliterates the former all-time high at 21.62. So use that 23.13 as a resistance level, coming back on the downside. See minor support here on the intraday chart at 22.50.
Is that an all-time high, or was it? I think we were higher than that back on the IPO,
Really?
weren't we? I think back on the IPO, didn't IPO like $26 or something? It kissed
Oh,
up
you,
to.
Dennis, you get
I gotta
me
go. I gotta go get you in trouble on that one.
Jesus, 26 even. Okay, after 23, after 23.
That's where it
13,
burned everyone back there on the IPO
Yeah,
day when it went
26.
straight down. That wasn't the best IPO in the world. Well, it's back. Just like Pandora's back, Facebook is back too.
That's what I was just gonna say.
Facebook,
if
Pandora.
Facebook can get back over 45, then Pandora can go to 26.
Facebook 45.54. JP Morgan raising their price target from 44 to 53. CLSA with positive comments as well. Everybody hop on the Facebook party here. I tell you, though, we were talking about trains moving. This train has been rolling ever since earnings day. Eventually, that train will probably slow down and stop, but I mean, who knows when it happens. So it's hard to chase it here now. Got up to 46, obviously. I mean, make sure you have reference points. Make sure you know where your out is, because obviously stocks that continue to climb like this can eventually give some back too, but it doesn't appear to be going to do it today.
Was looking at that stock just as yesterday, and this is why we like to talk about daily highs and lows as being potential double bottoms, and that's exactly what you had yesterday. You had a steep sell-off off the 44.79 high. You made a 43.23 low on Tuesday, and then yesterday you dipped 12 cents below that 43.11 and was off to the races. So keep an eye on that. No signs of a double top yet, but we're keeping an eye on the resistance at 46.
And just like the train was rolling in Netflix too, it made a new all-time high, which is absolutely incredible 2 days ago, and actually built on that yesterday, got up to 314.18. Just like that, kaboom, we're down $10 from that high that we made yesterday, and we're down $5 more today. Morgan Stanley is downgrading the stock, so that's the major reason. But I also noticed when Icahn was on CNBC, the one thing I did notice that he said is that Netflix is not what it used to be when it was at $50. So that was, he says he hasn't sold a share yet, but he also was obviously saying he doesn't like it as much as he did when it was at 50. So that's a little concerning too. So obviously Netflix 300, they look like they're defending that level in the pre-market there. Wow. Lots of lows there right in the 300 area. So obviously that's your bogey. That's what the stock needs to hold. Do you think it can hold it here today, Joel?
Dennis, I don't do well making calls on these $300 stocks, and I didn't make good calls shorting it when it was in the 200s. So I'd say if you've held the ride back to new all-time high, you're sitting on profits like Mr. Icahn. Bulls make money, bears make money, and pigs get slaughtered.
Well, let's just look at the E-mini one more time. We are running short on time, but we're trading right here. You were talking about potential tops or double tops, 1683 and a quarter and 1684, and we are about 3 or 4 points off of that. So that's the level you're citing on the upside. What are you looking at as support on the downside here?
It's tough because I don't see any major support, Dennis. Going down to your yesterday's low at 71 and a quarter. And that coincide with your intraday low at 70 and a quarter. So slippery slope on the downside, but it doesn't look like we've got any bad news, out to push the market in a negative direction. Let's just keep an eye on the overnight low of 78.75, and if that's taken out, then perhaps reevaluate the market today on the upside.
Well, that's our show for today, guys. Have a great trading day, and we will be back at you tomorrow.